The top 5 accounting mistakes small business owners make. Our passion is to help small business owners exactly like you. So please click the bell and subscribe. That way we can get more of our message to small business owners exactly like you. Are simple accounting mistakes costing you thousands or even tens of thousands? Are you sick and tired of wondering where all your profit went? Follow my video and I'll explain more. Missing VAT registration and thresholds. This is a really common mistake. Now, when you first set up in business, there's no legal requirement to register for VAT. So what you can do is you set up your business, you get going, you look to see if you can get those customers. Now, when you get to 85,000, it can sometimes be in a short amount of time. You can do it in 2 months, 3 months, 5 months, 6 months. Now, what you want to make sure is that you're keeping a running track of your income of how much you've invoiced to your customers. Because it's very easy, and we've seen it time and time again, small businesses have got to a year, 18 months when they're doing their accounts, and they're scratching their head because they should have registered for VAT. Now that can be really embarrassing because you may have to go back to your customers and say, oh, sorry Mr. Customer, but I should have charged you VAT, can I bill you? Well, if they're not VAT registered because you're doing business to consumer, they're not going to be happy. So you may end up having to swallow the VAT yourself, which is going to come straight from your profit. So make sure when you're running your business, you are keeping an eye on your VAT threshold limits because it's something that people make mistakes all the time. And that's as well as deadlines, making sure that you keep your VAT up to date and you're not burning money through penalties. Incomplete records and record keeping. I get running a business can be really extreme. You've got this to do, that to do, this to do, this to do. And that's without worrying about accounting and every single receipt. But if you've got incomplete records, you may be losing money in a black hole. So you may have receipts that have not been claimed that you pay for personally that have just disappeared. So that money's come out your bank account, you won't get the corporation tax relief on it, and you'll end up paying dividend tax on it because it's your personal money. What a waste of money that is. So make sure when you're running your business, and I'm not saying write up a ledger like it was in 1981, I'm saying keep your receipts in your wallet. Keep your receipts in an envelope, in your car, in your van, wherever, and make sure that they can then transfer onto your accounting systems such as QuickBooks or Xero that will make sure that you are not losing money with wasted receipts. Because what you also want to make sure that you're doing is that you're invoicing all your customers for the work that you're doing at the same time. I've lost count of the amount of tens of thousands of pounds small business owners have lost because they haven't invoiced their customers properly. Because all you've really got from an accounting perspective is money in and money out. So you want to make sure that you're getting all of the money in possible under the sun, and you want to make sure that you are not losing expenses that you've genuinely paid for and losing that valuable tax relief within your business as well. So make sure as you're running your business, and it doesn't have to be a work of Dickens, that you've got things in place where it's capturing everything that you are running, both from an income perspective with your business and also the expenses. This is one of my personal favourites, is Overdrawn Director's Loan Account. Now, a bit technically, the business is you, but from a legal perspective, it's separate because it's a separate legal entity, because that's what a limited company is. Now, as you're taking money out of the business, you should be tax planning in advance. So an ideal first scenario is to get yourself up to 50 grand a year, because that's very efficient. This is subject to you earning profits of that level. When you're taking out the money, and I'm just going to use a round figure of £4,000 a month, some of that will be broken down into a salary and some of that will be dividends. That will keep you nicely under the 50 grand limit. Happy days. Now, one thing to bear in mind, there may be other things that you're taking out your company that you may need to declare against extra dividends. And let me give you some examples. If you're paying your personal tax bill through the company, that's going to go against drawings that you've had. If you are paying personal expenses, where you've got a car payments that are going through that are personal, that's going to go in your director's loan account. Okay, if you sneaked a little holiday on there, where you've gone into a travel agent or you've gone online and you've booked that wonderful Caribbean holiday, you've got it, that goes down as a personal drawing. Now, it's quite easy without looking, where you just go bang, 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 and you've got all these monthly expenses that are going through your account. And instead of your net drawings of 4,000, it averages 7. And I've had some clients where it's been 10. And I've had other clients that it's been 18, and then their tax bill has gone where it's got really, really big, because they're not just declaring 50 grand's worth of income, that you've got to declare all the personal expenses as well. Now, it's quite easy to forget about £500 a month. Well, that's 6 grand a year. It's quite easy to forget about £1 a month. And if you had loads of other bits that are coming out on a regular basis, it's well easy, and you completely forget 2.5 grand a month. Well, that's another 30 grand a year. That's a significant percentage increase on 50. Now, it's okay to declare that, and we've got loads of clients that are just by the 100 grand limit, which is the second tax line that you want to get to, subject to available profits. So make sure when you've got a handle on the expenses that going out your business, which ones are personal, which ones are business, because the personal ones that are directly related to you are coming out your director's loan account. Listening to the wrong people's advice. We have got some wonderful people in our lives, and I find that I'm truly grateful for that. You can go to certain people, they'll give you great advice that's on the money, and it will help you personally and your business survive and thrive. But we've all got them wallies that we know, or it could be Dave down the pub that's going on in your ear, and they go, you should do this. Now, they've never run a business before, they've got no experience, but suddenly they are the world's greatest expert. And that could be just because they've watched 2 episodes of Dragon's Den. But what you want to be careful of is their advice could be really sound. But again, it could be advice that was relevant in 2002. So what you want to make sure is that you're not listening to Dave down the pub, who's giving you a load of crap because they're angry and miserable because their life is rubbish. Their affairs are out of date and they haven't got the right experience. We have a policy with all of our clients where we give ad hoc phone calls with no extra charge. And we do that to get around this problem, because there's nothing worse than getting advice from someone else and it puts that seed of doubt in you. And that seed of doubt stops you being the best version of yourself when you're turning up to your customers, and it just stops your whole flow. And when you're a business owner, you've got to be in your best energy, your best form, because that's when you'll do your best work, you'll convert everything. It just works. So make sure that you've then bouncing your ideas off someone that's professional and knows what they're doing. Now, I'm sure Dave means well, and I'm sure Dave probably does care, and I'm sure he's quite proud that he's giving you this advice. But if that advice is from 2002, it's out of date, you could get yourself in massive trouble. Next one is not having proper systems in place. Now, you can get as a solopreneur a business, and you can get some contractors as well that you may define a team that can help you springboard, and you can do more. So what the normally first point for a lot of small business owners is they'll get rid of their admin duties, or they may get rid of their bookkeeping, and they can concentrate on their core business where they're going to earn more money, so they actually get a return on that book. By them not doing the bookkeeping, they can go and earn a significant more larger amount of money. Happy days. Now, what you want to do as you scale further with team and also systems is you need to have the right systems in place that are catching things. So you need to make sure all your invoices are on a cloud accounting package. Are you capturing all of your expenses via a document management system? And even more important than that, have you got a customer workflow where you're making sure all the services that you're providing for your customers are done on point, on time, consistently to a great standard? So as you scale your business, you want systems and team to be able to help you. A lot of small businesses fall into the trap that one, they go, I cannot see the value in this bit of software, this bit of kit, or this team member. And that's what normally stops businesses growing successfully, because things either get missed, quality diminishes, they lose money, and it's all a bit of a mess, as like I said with incomplete records before. So make sure when you're looking to scale your business, you've got a really great eye on your finances, but also a great eye on your systems, because that will allow you to keep on being excellent and giving a great service to all of your customers. Don't take any of this video as preachy. We all make mistakes, and some of us make mistakes every single day. It's just business, it's just life. When do you ever do something that's new for the first time, you're putting out a fire and you do it right first time? You don't. You just make your best decision at the time, then you move on. Then you can always look back and learn it and say, oh, that was a great decision, I'm going to do more of that. Or you go, oh my God, that looked amazing at the time. What a load of rubbish. So just stop. But mistakes genuinely happen. So I'm not saying eradicate all mistakes and be perfect, because it just doesn't exist. Look to minimize them as much as possible, and the easy wins where you don't ever need to make a mistake in certain areas, don't fall into them traps. That way you'll see a better business owner in yourself, and you'll see a better business allowing you to thrive to get to exactly where you want to be for your personal and business goals. I hope this video's helped and maybe spurred some questions, but even more so, more importantly, some actions. But if I can be of any help, contact my discovery call link below. I promise there'll be no pushy sales pitch. I'll take on board any questions you may or may not have, and I'll look to provide value. But more importantly, I promise there'll be no pushy sales pitch.